It's not over, and more banks will continue to fail, and they have. Just days ago, Citizens Bank collapsed after 94 years in business, and that marks the 5th U.S. bank failure this year. Combine this with the numbers just released on Q3 regarding central banks' gold buying sprees, and you have a very clear sign of what is to come. I'll break this down and explain where the FDIC sits in all of this, because if they go broke, your money is in big trouble. Coming up. I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer, but really specializing in custom strategies, because we are at the end of this currency's life cycle. And the interesting thing to me is that most people just don't get it. And when they set this system up, the dollar can never go away. Well, guess what? Everything has a life cycle. And I guarantee you, I'm at a different point in my life cycle at 69 than my granddaughter at 8 is. And you can see it, can't you? I mean, you're not going to look at her at 8 years old and go, oh, well, she could be 70 or 69. And you're not going to look at me and go, oh, well, she could be 8 or 9 years old. Well, currencies are no different. Everything has a life cycle. And what we're seeing and witnessing and experiencing in the banking system is the normal breakdown at the end of the cycle. Because after all those years of zero interest rate policy and force feeding the banks and the corporations and the hedge funds on cheap debt and then raising rates rapidly, I mean, frankly, a lot of people will say, well, unintended consequences. But these guys know what they're doing. And if they don't know what they're doing, why in the world are they in such a big position of power? They know that this is the end. And we have to say, what are you? I'm asking you, what are you going to do about it? Because if you're counting on these guys, you're counting on the wrong guys. Their job is to keep you in the system so that it's easier to transfer your wealth. Because who are you going to call when everything implodes? Who are you going to call when we go into hyperinflation? You can bang on the doors if the banks shut and do a bail-in, and it's not going to make any difference. So let's just begin, and we're going to start at the beginning with the most current bank failure, Citizens Bank. 5th bank, U.S. bank in the U.S. to fail in 2023. 2 branches of Citizens Bank will reopen as they had a lot more branches, but 2 branches of Citizens Bank will reopen as branches of Iowa Trust and Savings Bank on Monday during normal business hours. Nothing to see here, folks. Just move on. But they had more than 1,000 branches throughout the Northeast, and they've been around for 94 years. The government has shut down Citizens Bank due to financial issues. You think these financial issues might have been caused by the rapid rate increases and all of the government treasury debt that they were sitting on? And do you think that what's impacted them, what's impacted those 4 other banks in March and April, are not impacting all of the other banks, including the Federal Reserve Bank? Think again. They allowed the FDIC to take control without providing any public warning, and this needs to be a public warning to you. Because when this happens, when you lose access to your money, when they bail you in, when do they do it? Friday after the close. Friday after the close. There's nothing you can do. It is not over. The banking crisis, frankly, has just begun. And hey, maybe there was this little glitch, but a whole bunch of U.S. banks were hit by deposit delays that can create a problem. Multiple U.S. banks were hit by deposit delays on Friday caused by an error at a payment processing network, according to the Federal Reserve. Now, a lot of people are living paycheck to paycheck. So how do you think this would have impacted them? I hope you're not one of these people, but it could certainly create a lot of problems if you have auto withdrawals, because those probably went through. Customers at Bank of America, Chase, U.S. Bank, Truist, and Wells Fargo complained of issues on Friday morning, according to Down Detector. Some users on X, formerly known as Twitter, complained they didn't get paid on Friday. This is a problem. The ACH system allows banks to send electronic payments to each other. Everything from direct deposit paychecks to customer bill payments for mortgages, utility bills, etc., flow through this system. So who owns this system and who operates it? The ACH is operated by the Federal Reserve banks and the Electronic Payment Network. So that's Chase, Wells Fargo, all these guys that were impacted by it. But who owns the Electronic Payment Network? It's a private company owned by the Clearinghouse Payments Company, buried layers, right? Which is owned by a consortium of major multinational banks. The banking group includes banks as JP Morgan Chase and Wells Fargo et al. Can you see this club and can you see the layers? And do you remember what happened in 2008 when nobody went to jail? Because they aren't doing anything illegal, but they are creating layers of making the system opaque to you and me. But it's the foxes that create the game and the foxes that guard the hen house. And these rats are leaving the sinking ship. Can you see that? I really hope you can see that because it's critical. But don't worry, nothing to see here because your accounts remain secure and your balance will be updated as soon as the deposit is received. But who knows when they're getting the deposit, right? You do not need to take any action. You just have to bend over and take it. Customers do not need to take any action. Yes, you do. You need to get out of this system. Yes, you got to have a bank account so you can transact and do those auto deposits and auto withdrawals, but I keep nothing more inside the system than I need to conduct business. I have cash outside of the system if I need to make a deposit, but why leave it vulnerable? Because these banks get to use your deposits as collateral for trading. You are not the owner of your account. You make that deposit, and you have become a lender to these banks, and you are merely a beneficial owner, not a legal registered owner. And it's getting worse. I mean, what is it going to take? And here's another one. Customers' accounts remain secure. You do not need to take it. Nothing to see here. Just keep going. Just move along. Everything is fine, even though you might have been depending upon that money on Friday. In the meantime, I freaking love this, and I hope you realize how facetious I'm being. Wall Street gets more leeway to invest client margin under CFTC plan because there's not enough leverage and risk inside of the system to begin with. So CFTC issues plan to roll back some of the post-MF global restrictions that were put in 2008. And after all, didn't we see how great that worked for all the banks that failed in March and April? Because after all, after 6 years, there hadn't been a problem. And now all of a sudden there was a problem again. You think that can't happen again? Think again. U.S. Treasury ETFs would also get green light for investment. Yeah, they can use your deposits for their benefit. It's perfectly legal. Because you are not really the legal owner. You are the beneficial owner. And what's happening is disgusting. Disgusting. The measure marks a years-long drive by the Futures Industry Association. Who do you think's part of that? J.P. Morgan, Wells Fargo, all those guys, and other market players to get the swaps and derivatives watchdog to loosen some restrictions on safeguarding client assets. Yeah, nothing to see here. We need to have even more leverage and take even greater risks with client money. Sounds like a great idea to me, and I hope you can see I'm being facetious. Those restraints were proposed in 2010 as a response to the global financial crisis and finalized in 2011, and we don't need them anymore. Nah. The FIA, whose members include big banks like J.P. Morgan Chase and Goldman Sachs, submitted a joint petition along with the CME Group in May seeking the changes. Invesco Capital Management, LLC, which operates a commodity pool, had asked for the changes for Treasury ETFs in a September petition. Do you still think Treasuries are safe? Because if you do, I have this bridge in Brooklyn I'd like to discuss selling to you. It's crazy. It is truly crazy. Can you see how interconnected this whole financial system is? And they're all too big to fail. You know when it's going to fail? When you're the one that's going to eat it in the shorts. Because you and I are just the right size for failure. But these big guys, these interconnected, how can we let the system go down? No, we can let them take more and more and more risks with your wealth. Sounds like a great idea to me. Seems like a good idea to you. I hope it doesn't. I hope what you're seeing here matters and helps you make some changes and get out of the system as much as you possibly can. And if you can't, then at least properly diversify with enough gold outside of the system to protect any wealth that you're going to keep in there or you're forced to keep in there. Thank you, 403Bs. Because this crash, this crisis is on its way. It's not something I'm waiting for. It can happen at any moment. And what I'm trying to show you is that simple fact. Because it's not just the banks. A lot of that risk were transferred to non-bank entities. And so now they've become too big to fail. U.S. lays path for more financial giants to get Fed oversight. Officials led by Janet Yellen describe bid to mitigate risk. Yeah, because let us not forget that Wall Street gets more leeway to invest client margin under CFTC plan, but let's mitigate risk. Are you freaking kidding me? I mean, you cannot make this stuff up. You cannot, because one is on this page and the other is on that page, and one came out yesterday and the other one came out today and last week, and oh, that's old news. They have trained us to be very, 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 very short-sighted, because when failure comes, who are you going to blame? You're going to blame yourself, because that's what people do. But you have been suckered. And it's all of these guys that control all of it that are suckering you. Get out of this flippin' system while you still can. Because they've been putting more and more and more and more restrictions on us since 2008, when the system died. I'm sorry, but this stuff pisses me off more than I can tell you. Because how many times can you be lied to when you do not know the truth? Well, you know the truth. If you're listening to this, you know the truth. Stop accepting their lies. Stop saying, oh, well, the dollar can't fail. This can't fail. It's failing. It's already happening. The systematically important tag would mean stepped up oversight. I mean to tell you, what are they going to do? Run a stress test that doesn't even take into account rapid raises in interest rates that the Fed oversees, creates these stress tests, oversees these stress tests, and doesn't even put in the stress tests what they are doing. It's insane. It's insane. They don't have your best interest at heart. They have the bank's best interest at heart. They have their own survival. That is what they have to heart. So all of these guys, when is it going to be too expensive? When you're the one that has the most impact. Then it's going to be too expensive to bail. And your wealth will be bailed in. Make no mistake about it. Ahead of Friday's announcement, financial titans had been girding for a fight over the plans. Leading trade groups, including Investment Company Institute, the Managed Funds Association, the Mortgage Bankers Association. Who do you think are all members of those? Have all urged regulators to tread carefully on asserting a greater discretion and using a shorter timeline to designate a firm as systemically important. Why should they be designated as financial? I mean, it's a joke. It is such a joke because these guys do nothing. Yellen? Really? Are you kidding me? I would love to have a sit-down conversation with her because it's easier for her to say, oh, the economy is really strong. Okay, Janet, why don't you show us? Why don't you prove it? You can look at that would be a book, but you can look at a lot of the research on all these links that I give you. You come up with a different opinion than me, rock and roll hoochie coo. I can't tell you that your opinion is less valid, but I don't make a statement. I prove what I'm saying. How about having these guys prove what they're saying? Because their job is not to protect you. Their job is to keep you in this system. That is their job. Why would you believe it? Let's take a look at the FDIC and the banks. First, we're going to go to the insured banks. Then we're going to look at the FDIC. Because these are unrealized gains and losses on investment securities. And guess what? 7 quarters in a row, and this is probably not even as honest as it could or should be. And what do you have? This dark blue is held to maturity, right? Okay, a bond comes out at par. In other words, $1,000 for a $1,000 bond. It has a coupon, an interest on it. When interest rates go down, the market value of the bond goes up. What's been happening, when interest rates go up, the market value of the bond goes down. The light blue is available for sale securities, so they have to liquidate. And when there is a run on the bank, these are the securities that get sold first. But these held to maturity, Bank of America, we're not going to take any losses on our held to maturity. Well, you better pray you don't have a bank run and you're not forced to sell them, right? Because what they're saying is that they are going to hold these to maturity, at which point they would get par back. They would get $1,000 back for a $1,000 bond. Really? Because what will that $1,000 buy in the future? Thank you, inflation. Less and less and less and less. We really have to look at this. Because quarter over quarter, so the unrealized losses on securities from this quarter to this quarter were up 8.3%. Can you see that this is the iceberg? And we don't even really know how much of this is much worse than this. Because all of this stuff is then also leveraged through derivatives. And everybody admits, meaning the BIS, the IMF, the Federal Reserve, the FDIC, everybody admits that the market value, which is what you're looking at here, the market value of the derivatives does not reflect the true value at risk. So this is layers. All you're seeing is a little teeny piece of what's really happening. The rest of it is hidden. And it's hidden by all these same guys that create this garbage, push it down our throats, use our equity to bet and gamble on this stuff and take risks on this stuff. And in 2008, nobody went to jail because this is all contract, all contracts. And that's all counterparty risk. And you and I didn't write these contracts. These guys wrote these contracts. And so they know that you and I don't read these contracts. So whose best interest do you think they are written in? And what is it going to take for you to take back your wealth and your freedom? What's it going to take? Do you have to lose it all? Now, we've got more and more people that are feeling uncomfortable and quarterly change in deposits. These are all FDIC insured banks. And you can certainly see how in the first quarter there was your run. But look at this. Not all that much, right? So people are feeling more comfortable. Oh, they solved the problem back in March and April, and that was then, and this is now. Well, Citizens Bank is showing you it ain't over yet. Why would you leave your wealth in your savings account or money markets or anything that you're keeping in the fiat money? Why do you keep it vulnerable? I don't get it. I really don't. Because what's also interesting is buying time. Uninsured deposits declined, while insured deposits increased. So when you're looking at this difference, it's because uninsured deposits went elsewhere. But more people feel safe because of the insurance? Well, I think that is confidence misplaced. The decline in total deposits in the second quarter of 2023 was nearly offset by increased wholesale funding, which rose 22.8% in Q2. What's wholesale funding? It is hot money. So it is brokered money that this bank over here has in excess deposits and they deposit it in this bank. But if they need to pull it, they're going to pull it really fast. And that leaves the insured deposits vulnerable. Make no mistake about it. This is not good. What I'm showing you here, if you don't even understand it, can you see how upset I am about it? I'm telling you, not good. Not good at all. So let's look at the DIF fund. This is the reserve ratio, so percent of insured deposits. And okay, in March, when the crisis hit, it was at, well, it says 1.11, but you got to put some zeros in there because that's a percent. So that means they had 0.0111 to deposit every $1. Now it's less. June 2023, wait a minute, weren't they going to have the banks put in a whole lot more money? Yeah, they were, but it still declined. Still declined. Part of that is because more insured deposits are going in there because people feel like there's no banking crisis. There's a banking crisis. It's not over. So this is the balance, right? So as of June, this is the one that just came out. There was 100, this is in millions of dollars. So what they have in the reserve to bail out banks is $116.968 billion to ensure $10,586,340,000,000 worth of deposits. What we're really looking at here, and what they're attempting to do here, is a controlled implosion. Because if the implosion happens in too many banks at once, it's going to be really obvious that the emperor has no clothes, that there is no money there. And they came this close to it in 2008. They said if even one more little bank, small bank failed, it would become obvious to the public that they had no money in that DIF reserve. How do you feel about this? Can you see how easily this whole thing can get way too expensive once they're going to bail you in? Way too expensive. And much as they would say, well, this isn't going to cost you any money. This isn't a bail-in. It was such garbage what they did back in March and April. And it was a lie. It was a big fat lie. But let's face it, funds to insure deposits continue to decline. It really is that simple. Now, where in March you had 0.0111, now you have 0.011. Because insured deposits keep going up. But even though this went up, the insured deposits went. Are you out of your minds? The insurance is only as good as the counterparty that insures it. And look, this is not information that you don't have access to. Just go in a search and put in DIF Reserve Deposit Insurance Fund Balance, and you can read it yourself. You can read the whole report. I don't have access to anything that you don't have access to. But truthfully, what is it going to take? Because the powers that be, they know everything that I'm showing you. Don't you remember that meeting where those that sat on the committee laughed because, yeah, you're going to be bailed in. The public's going to be bailed in. Ha, 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 ha. Isn't that funny? I don't find it funny at all. I don't find it funny at all because they pick and choose who gets bailed out and call it something different so that it's not. Okay? Don't call manipulating the price of gold confiscation while they're freaking buying more of it than they have since they started tracking how much gold central banks were buying. We knew that in the second half of this year, look at way up from what they had done. Now this is going back to 2010, which was when central banks became net buyers. In other words, central banks were buying more gold than they were selling. And this year looks like, well, you can see 2022 was a blowout year for central bank gold buying. And this year is on track to blow that away. More gold buying than they've ever done. What do you think they know that you don't know? I mean, that alone is so telling. Central bank demand for gold saw no let-up in Q3, building on the record-breaking first half of the year. I flippin' rest my case. Who knows more about the destruction using this stuff? And that's the only tool that these guys have. That's it. That's it. That's it. And every time they do that, every single time they do that, the purchasing power value of the money that's out there is gone. And you barely have 3 cents left. And that's official. That's not my opinion. I think it's much worse than that. It is hanging on by public confidence because nobody else has confidence in this system. You look at how much gold buying the central banks are doing, they don't have confidence in this system. Why? Because they know they're at the end and they're out of tools. Do you have to experience this for yourself before you make the change? Before you shift your paradigm and you start to protect your standard of living, your wealth, your kids' future, your great-grandchildren's future? Because that's what my fight is about. That's what my fight is about. I want to ensure that this next system that we go into is more fair, that you can get fairly paid for a day's labor whenever you want to use it, that you have the ability to have a reasonable standard of living now and prepare for the future. They want to take all of that away. They want to take away all of your freedom. What's gold and silver? It's freedom. Because this is the only gold, according to the Bank for International Settlements, a central bank. Gold is the only financial asset that runs no counterparty risk. That's it, people. There is your answer. That's why, can you pull that graph back up, please? That's why you are seeing central banks buy more gold than they ever have since tracking began, because they know that we are at the end. It really is that simple. It really is that simple. Me too. Me too. Plus food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done. Get it done ASAP. And community may be the only way for many of you to be able to secure a reasonable standard of living. I've been working on this in earnest, gold and silver since, forever, but in earnest since 2002, and the rest of the mantra since 2010. But a lot of people don't have the opportunity to do that, and we don't have the time. We don't have the time. There's not one teeny-weeny doubt in my mind. We don't have the time. So the best thing to do is come together in community. And what we're also seeing is the rise of a revolution. I agree with Ray Dalio. I agree that the revolution is nigh, and we're seeing it in the rise of the unions. We need to, all of us, come together in community and say, no, there are more of us than there are of them. We have to do this. We don't have a choice. If we don't do this, we're doomed. And I'm 69. How many more years do I have left? 31? Because I think I'm going to live to be 100. 31 more years? But my granddaughter that's 8, she's got a lot more years to go than I do. And what about her children? And what about those children? We are here now. We are living through history, and we can make a difference. Let's every single one of us make a positive impact on a lot of people, starting with one person. And that can look like anything. It doesn't matter. But we have to come together in community. We have to. So, we have to. Sorry. The truth is that I see this thing crumbling. And it is a repetition of history. And I've been studying this since 1987. And a lot of people talk about the death of the dollar and all of this. It's the death of the whole system. We have to go back 100 years to the Industrial Revolution to find what we're going through right now. I will never give up this fight. I will fight this fight till my last breath, because that's our obligation and our job in this world, is to make a positive difference. Not for the 1% that are greedy and evil and narcissistic and disgusting, but for everybody. because we are family together. We're all in this together. So, make sure you watch last week's video, Insiders Cash Out as the Empire Crumbles. And you should be cashing out too. And if you haven't done this yet, click that Calendly link below and get it done. Get your gold and silver strategy put together. Go to Beyond Gold and Silver so that you can make sure that you have security in food, water, energy, security, barterability, wealth preservation, community, and shelter. We are running out of time. We are running out of time. I can't tell you the exact second. It doesn't matter. I would rather be 10 years too early than even 1 second too late. I don't care about the games that they play with the markets and the whoop-de-doo. Because, hey, the Fed may pivot. They may drop interest rates. We're going into a hyperinflationary depression. What do you want to do? You want to go into it with this garbage, and that's what it is. So I'm sorry if I'm offensive, but it is. It's nothing. It's debt. It's debt. You want to go into it with debt because debt is going away? Or do you want to go in with a bazooka? A bazooka is what I personally prefer. So if you haven't done this yet, make sure you subscribe. Leave us a comment, give us a thumbs up, and share. Please share, share, share. And until next we meet, your Wealth Shield. Please be safe out there. Bye-bye.